Welcome back. Premier Group has weathered tough trading conditions, delivering a 3.7% rise in revenue and a 32.4% jump in headline earnings per share. And joining me for a closer look at the 6 months that was is CEO Kobus Gertenbach. Thank you so much for your time, Kobus. Let's actually start off with that top line growth. Just lay the table for us on what story this is telling.
Well, I think that first, thank you very much for the opportunity today. The underlying trend really behind our revenue growth is that soft commodity prices globally has been softening in the wake of the big inflationary global spike that we saw in food prices, especially following the Russia entry into or the war with the Ukraine that also spiked wheat prices quite significantly. And so what we've seen during this period is a sort of a normalization, a slightly lower to sideways movement in wheat prices versus last year. Mm-hmm. And because we, especially wheat prices have such a big impact on our pricing that we push through to the consumers, mm-hmm. It's really a testament to the extent to which we have not taken any price increases since the prior year, especially in a Southern African economy that has been under a little bit of pressure from a consumer spending perspective, and it shows that our prices out has stayed flat, while commodity prices have given us a little bit of relief in order to offset some of the other price pressures that we have within our basket, like fuel prices and wage increases, etc.
So would you actually say that that margin expansion that we did see is really a story of lower costs rather than higher selling prices?
Absolutely. I mean, that is undoubtedly the situation in the current highly competitive markets that we operate in, where there's multiple players with competing products. The ability to just endlessly push through price increases to fund inefficient operations is just not possible. And so our relentless focus and massive investments over the last 13 years, where we've invested over 6 billion rand in our facilities to have state-of-the-art, large-scale facilities with big economies of scale, are continuing to pay off for us. And as we run those factories and supply chains at extremely efficient levels and control our costs in the process, we reap the benefit of that in terms of our margins.
Actually, what level of investment are you putting into that program of achieving operating efficiencies?
Yeah. Look, I mean, our current year, we will spend probably around 700 million rand on various capital projects. The bulk of that is going towards either a few gains in capacity here and there, but a lot of it also drives better quality product that we try to constantly push out to our consumers as we innovate and do things to keep our product lines fresh. But it also gives us efficiency levels that we continue to drive, and that is absolutely paramount in order to sustain good financial performance. The 700 million rand has to be read against a turnover of roughly about 20 billion. So we're spending around about 3.5% of our turnover at the moment on our various facilities in order to make sure that we have the best-in-class production capability.
All right. Well, I mean, just talking about the tough macroeconomic environment, something that has not contributed to that is load shedding this year. Has that started filtering through to the business, the operations and the numbers at any point?
Look, we're all quite grateful that there's no more load shedding. I think that within a factory environment, switching on, switching off, switching on, switching off, or putting in alternative generation capacity that runs on fossil fuels that really do cost an arm and a leg to sustain is really not what we would be looking to do on an ongoing basis. And so we're extremely grateful for the extended period to which the electricity supply has been consistent. I think the other side of that is that everybody in our industry, all our competitors, everybody's facilities are also having the same benefit of not being subjected to load shedding, and therefore the competitive, I guess, dynamics in the industry has certainly stepped up. And I guess one needs to be really on top of your game in an environment where there isn't such structural impediments anymore that suppresses competition at times. So that means more competition and better value for the consumers out there.
All right. I did note also, Kobus, that there's pressure coming from the Mozambique business. What are the dark spots there, and how you're managing that risk?
Well, I think the Mozambican economy has been under severe pressure now for a number of years, following quite big fraud and scandals that came out with the misappropriation of funds within the Mozambican government. That has really culminated in quite difficult economic conditions on the ground. And I think consumers in Mozambique have been under even significantly more pressure than we've experienced in South Africa. And so ultimately that culminated in some political unhappiness. And, at the end of the day, the opposition parties to Frelimo that's been in power for a number of decades are claiming that the results were rigged and that they didn't get their fair votes counted, and resulted in quite extensive protests to resist the certification of the results. That has sort of run quite hard through to Thursday of last week, so it's really fresh off the press. Our facilities have had to close down there at times, and just make sure that we keep our people and our facilities safe. And especially on the distribution side of our product, it wasn't safe to go out with trucks loaded with goods. And so it's a difficult environment to operate in, and we really hope that a peaceful solution can be brokered very soon to bring the country back to normality.
Yeah. All right. Well, Kobus, as we wrap up the conversation, this was your half-year reporting period. Going into the second half of the financial year, what are your focus areas to keep this growth momentum going?
Well, I think it's more of the same. The structural investments that we've made in efficiencies and in our operations, combined with relentless focus on driving our facilities to operate at optimal efficiency, is going to continue to remain our focus. And I think that we have the ability to sustain the first half's performance and do exactly what we did in the first half again in the second half. We certainly are not expecting any price increases on the balance of our product portfolio. The only place where we're continuing to see tough supply and demand on raw materials is maize, where our maize harvest was not up to the normal standard in this past year from a size perspective. And we're also exporting a lot of maize to our neighboring countries. And so the relentless price pressure continues on the maize side. But the rest of the business, it's really business as usual. And we just need to execute again like we did in the first half.
All right. Well, thank you so much for your time and giving us more detail on those numbers. That was the CEO of Premier, Kobus Gertenbach.